All right. Hello, everyone. Welcome to another episode of Market Trading with your host, Tone Vays. Doing proper English, I am your host, Tone Vays. Oh, man, do I have a show for you today? Let's just go to the charts. I'm going to talk about this rabbit hole I went down yesterday. It wasn't political. It was financial. Yeah, just when I thought I was closing all of my unreasonable number of tabs. Let's talk about the charts real quick. Then I'm going to send you down a crazy rabbit hole known as the United States budget. And then we'll see what the market is doing. I'm not going to do spaces today because I got a lot more research to do. Let's do it. It's going to be a good show. Okay, let's begin. We're going to go see all these tabs. 70% of them were not here yesterday. Holy shit. This is what my day yesterday was like. And that's not even all of them. I have a whole other section. We'll get there, though. You want to stick around for that. And we're going to open another pack. Everyone keeps asking me what double cards I have for trading or giveaways, but I can't tell you that until I finish this box. I need a Tone Vays card or a Cypherpunks card. I'm smiling because I haven't eaten for over like 36 hours with what I was researching. It's like painfully crying. You'll know what I mean in a minute. Let's go to thanks to the moderators. I see Bernoulli, I see Mel. It's hard. Thanks for joining, guys. Okay, sometimes my videos automatically default to low quality. I don't know why. You just got to up the quality, guys. So, weekly chart. Our week has started off in a downward trend. Those of you that are busy and have fiat jobs, accumulate those bills, accumulate that fiat, because you're going to get to buy the dip. I'm even wearing the shirt. Forgot to show it when I was on full camera. There it is, the Buy the Dip shirt. Shout out to Barbie Buys Dips for making the shirt long time ago. Hope you're still watching. You should look at the grouping your tabs in Chrome. Yes, you can see in my Chrome window, I have multiple options. I have one tab, which I don't like, but I do have a session body, which is great. But you don't want to know what that's like. Session body. I can open it, and it's insane. So if I open this, so here's a recently saved one. This is all my links for Ukraine, because I started to write an article like 6 months ago explaining how and why the Ukraine war started. And yeah, so trust me, I utilize it. I'm utilizing it. And but I never finished the article. I was like maybe 40%. There's 5 reasons why that war started, and I only wrote up the first 2 reasons, but not the next 3. And now we have even more information and more revelations. I really wanted that article out long before the 1-year anniversary, but never got to it. Anyway, well, we'll get to this later. Back to the chart. Yeah, that spaces last night over January 6th is crazy. I get very frustrated. Look, I know Mario's popular and he has those popular spaces, but the problem is that not everything has to be in the form of a debate. Like sometimes you let one side with facts present it. That's what this channel does. This channel doesn't usually debate. Okay, this channel identifies experts and it presents the case of the experts, and other channels can do it the other way. So the stories from that channel were insane. In hindsight, it's actually very surprising that I did not get in more trouble for what happened in January 6th, but hopefully the statute of limitations has already passed. But anyway, let's get back to this. Yeah, this is what frustrates me about Mario Spaces, is that, look, I understand there are credible people on the other side of my views, but try to find credible people, not government propagandists, not outright Marxists, not like random people. And try to find someone credible with facts to debate the other side, not a homeless guy off the street. So weekly chart. People got arrested and thrown in jail for just stepping 1 foot on the grass at during January 6th. So, yeah. Yeah, talking about it is a bad idea. So much for free speech. So anyway, the weekly chart is heading down, but as long as it stays above the 20-period moving average and $20,000 and the lucid SAR, we really don't have all that much to worry about, and we just try to time a dip. Not much more to say. The allocation chart is very, very clear. In this form of allocation, you hold on to a very minimal position because your price is below 2 moving averages, they're declining, and they're below each other. So right now, a 40% allocation is very, very warranted. Now, ideally, I would have had an 80% allocation over here, and I would have been dropping it down to a 40% position. But at this stage, the 40% allocation is the perfect amount of allocation that should be in Bitcoin right now on the Consensio chart. Moving on, daily chart. The daily chart is consolidating here. This consolidation is bearish. We're also looking at a new swing low, which is kind of good because this opens the door for an MRI buy. Man, if we get an MRI buy, I'm going to be all over it, unless it's an MRI buy that looks that's right at 21, say 7. That would be an unfortunate place to get an MRI buy, like same place as the last MRI buy. That would be unfortunate for me because I don't like to buy double tops. A person can't censor your free speech. That's not how free speech works. A person can moderate. So I can remove your comment, and that's not censoring. Now, if YouTube, the corporation, removes your comment, that is censoring. Okay. Now, they can justify it saying that you are inciting violence, but technically, they are almost like a utility. So you need to learn the difference between censoring and moderation. Also, the Constitution grants you free speech from the government. That's it. That's what the amendment says. The amendment says the government cannot interfere with your free speech. And the problem is that the government did interfere with people's free speech because the government told YouTube and Twitter and Facebook what to censor. So that you don't understand how the Constitution works. Free speech is granted to you to prevent the government from censoring you, not private citizens. Now, the government said that, well, Facebook and Twitter are private companies. They can censor wherever they like. But behind the scenes, the government was telling Twitter what to censor. And that is a violation of your free speech. If it was Twitter doing it independently, they might be able to get away with saying, well, we're a private company, we do whatever we like. But there's plenty of evidence, and based on how many FBI agents were working at Twitter, that the government was in control of the censoring at Twitter, using the private company as an excuse that it's not a violation of free speech. So the Constitution is a negative document. it tells the people what the government can't do to them. So me removing your comment is not a violation of your free speech. That's not how it works. So the daily chart is, once it breaks this acceleration line, will probably go down and quite a bit. So right now, if you ask me this morning, I am pretty bearish, but at 10 a.m., everything could be reversed. So right here on the 4-hour chart, we have a red star candle. The last time we had a red star candle, we did go down further, but it didn't last very long. I am more pessimistic this time around. Now, if this consolidation lasts another 2 weeks, I will now start to be bullish. But right now, because it's only the second time we're approaching these lows, I'm going to be bearish this morning. But again, wait till we'll see what happens at 10 a.m. Before I go on, just a heads up, if you are interested in trading, there's a free Learn Trading section on Vays.com. Learn Trading, there's an affiliate links if you want a dollar cost average into Swan, or you want to run your own node, or you need a TradingView subscription. Please check out the TradingView. There you go. We have the Financial Summit, which is an event for traders. Yeah, Powell is speaking at 10:30 a.m. Oh, that's interesting. That could certainly move the market. And of course, there is Unconfiscatable, which is an event for Bitcoiners or shitcoiners that want to learn the right way of the future of technology. Come to Unconfiscatable. Follow us on all social media for more information. Yeah, there's a poker tournament. There's a lot of cool stuff. Okay, so where were we? Got 5 more minutes, and then I'll talk about the U.S. federal budget, which is an interesting discussion. Very interesting. Oil, look at that. Look at this chart. Fairly bullish, but I'm really interested what happens on Thursday when the next number is released on the U.S. Strategic Oil Reserve. This is interesting. Bitcoin is down, but GBTC is up, unless that's yesterday's data. That is yesterday's data. We haven't gotten today's data yet. But yesterday, Bitcoin wasn't really up much either. Maybe it was in the morning before the market closed. This could be an interesting development. Maybe there's some demand coming in for GBTC. So this could be interesting. Let's take a look at this at the end of the week. Oil, I like this green star candle. It's at the same place as the last green star candle. So I'll say the same exact thing, that this is bullish, just like on the 4-hour Bitcoin chart, this is bearish. Same exact red star candle, same area, bearish. On oil, it's the opposite. Oh, the green star just disappear? Yeah. To disappear because we ticked down a few cents. There it is. Now it's back. Let's make sure that it's there at the end of the week, and I would be fairly bullish. But I've been fairly bullish on oil. I think it's going to rebound and rebound hard. Same thing with natural gas. Gold, probably not interesting. It's not interesting. Gold is not that interesting. S&P 500. So I'm liking the S&P 500 here. I know the week just started. It's only Tuesday. I'm a little concerned, like what's happening with S&P today, but it has a little bit of room to the downside on a weekly scale. it can come down to 39.80, 39.85, and still be in a bullish trend. Correlation, S&P was rising yesterday, reversed, and now we're going down a little bit. Maybe the 10 AM reversal will take us up, but the Bitcoin chart on a daily does not look good. I'm not going to look at the stocks today. I'm sure nothing's changed. The S&P is not moving much. So the Fed statement, this is going to be huge. Now, for some reason, I am reading everywhere that the Fed is leaning towards raising it 50 basis points. I think that is insane, and this is what we are about to discuss. What do I think about the Meta chart? You know what, Meta I'll look at. I haven't looked at Meta in forever. I can't believe it's called Meta. Let's look at the Facebook chart. That looks unreasonably bullish. Even though it has an MRI sell, this looks unreasonably bullish. On a weekly scale. And even more bullish on a daily scale. It just has to break the MRI resistance line, maybe consolidate for a minute, get like a cup and handle going. Okay, so, oh yeah, let's see this. When is the data coming out? Yeah, I want to see that March data. I want to see that March data. It's going to come out tomorrow on the 8th. Next release date, the 8th. Today's the 7th. Keeping an eye on the halving. End of March. I'm telling you guys, end of March. End of March. I really think the average block time from now till the halving is going to be approximately 9.5 minutes. Not 10 minutes. So if it's 9.5 minutes from now till the halving is going to take place at the end of March. Keep an eye on that. Okay, so let's talk about this. Let me tell you, let's set the primer here. This chart is absolutely nuts. I'm going to be focusing on this chart from now until the United States defaults, which is coming a lot sooner than later. A lot sooner than later. Because of this chart. We're going to do, I'm going to send this research over to the Financial Summit, and there's going to be a deep dive into this. This is the only chart in American finances that actually matters. Nothing else matters. Well, like none of the other charts matter except this chart. The federal government current expenditures in interest payments. Okay. This is nuts. Now, why does this happen? Why did this happen? This happened, and this can go straight up. It can go like those memes with the line going to the moon. Okay. This is happening because interest rates have gone straight up. Like we were already saying how interest rates are rising at its fastest pace by percentage in history. I mean, you can see them rising faster over here, but they started from a higher level. So by percentage, they're not going to go up as fast. In absolute terms, they did. Okay. And these charts are free from the federal government, by the way. Now, this is the US deficit. So every year, if the government can't make enough money from taxes, they borrow money. They borrow this money with interest. It doesn't matter if they borrow it from themselves or if they borrow it from foreign governments. Now, the United States doesn't really borrow money from foreign governments. It sells its bonds to foreign governments. But if the foreign governments aren't buying those bonds, then U.S. entities will step in. They also sell a lot of these bonds to U.S. entities. Now, the U.S. government always runs a deficit because the U.S. government can never pay its bills, except in the late 90s, while the president was Bill Clinton. And then in 2000, Bush won the election and it went down. Now, why was this the only period in US history since World War II where the US government ran a surplus and the government made money? Was it because Clinton was such a great president? The answer is no. Clinton, was a warmonger as well. And but the wars that Clinton went into didn't cost the United States too much money. And Clinton happened to be president during the greatest boom in financial history in the last 50 years, the end days of the internet bubble. So the taxes that the government was earning from all of these, from the tech boom in the late 2000s, made the government a lot of money, and their spending was somewhat modest. So that is why this period in the last 70 years of US history ran a really, really nice surplus. And then Bush comes in, the tech bubble is over, so all of that tax revenue from new formed millionaires ain't coming in. He starts ridiculous wars, Iraq, Afghanistan, and shit starts going down the toilet. The housing boom certainly helped the government, but then the housing crash destroyed government revenue, and they had to bail out the banks and all those others. And then Trump is the president over here. As of 2016, deficit also starts to rise. Going into the Trump years, the economy was doing a little bit better, so the deficit was smaller. Obama did not really start too many crazy wars, just Syria. He just maintained the other crazy wars. Trump did not start any wars. That helped him a lot, but there was still more deficit during the Trump years, and then here comes COVID. So this is how much money the government's borrowing every single year. Now, here is the cumulative debt of the government. And this cumulative debt starts to go up exponentially. Now, what you have to realize is, in those great years of 1997, you see how it stays flat. 97, 98, while the government is running a surplus, the total federal debt is somehow still rising. Look at 97, 5.5. Look at 99, 5.7. Why is the total public debt rising as the government having a surplus? Well, I'll tell you why. Imagine if you cannot pay your bills from your job. So if you can't pay your bills from your job, you use the credit card. Now, in the case of the government, unlike you, the credit card has a very small percentage rate. So let's assume you have a credit card whose interest rate is tied to the federal funds rate. And in the late 90s, that funds rate was 5%. Your credit card is here at 20%. So when the government had to pay 20% on its debt, they had very little debt. By the time the 90s roll around, they have a lot of cumulative debt, but the interest rate's low. But they don't use any of the surplus to pay off the principal of their debt. They're like, oh, great, we have extra money, let's go to the strip club. So that's basically what they did. They didn't actually pay back the debt that they had. Therefore, the cumulative debt in the 90s is still rising because they borrowed all this money prior to the late 90s, and they're paying 5%, and now they're remonetizing that debt at 5% interest. Here comes the next set. They never pay back the principal. All the money they've ever borrowed gets accumulated. And now in the late 2010, in the early 2010s, And in the early 2020s, the rate drops to 0. So right here, between 2009 and 2015, they're able to accumulate extra debt without paying any interest on that debt. They're remonetizing the debt. Now the interest rate starts to rise a bit in the late 2010s. This is longer than I wanted to cover this. I cannot take this call. And one second. Anyway, the point is, this cumulative debt will now be remonetized at current level of interest here. And that is why the bill on interest payments on all that cumulative debt for the last 70 years is going up exponentially. So all I wanted to do was recreate this chart, because when the federal spending, when the budget for 22 came out at the end of 2022, they have a line here, interest on debt. And I wanted to just redo this chart and make it, a little bit nicer. I wanted to combine Medicare and health together because they're both health. I wanted to add a couple of more things. I don't mind being defense and veterans in the same line combined, because they're both, it's, the war machine, basically. The more wars you take on, the more veterans you'll have, the more money you're going to spend on veterans. Education, I wanted to add another department or two. But anyway, I wanted to redo this chart. And I wanted this back for several years because I wanted to know this, interest on debt. And all I wanted to do was learn how to make these things. I found a free website. I didn't know these were called Sankey charts. So Sunday night, I spent a few hours trying to find, a nice free way to make one of these cool looking charts. I'll choose the colors, I'll choose the names, but I'm like, oh, this is cool. Here's a free source. By the way, it took me hours and hours and hours to find a neat way to do these charts for free because I'm cheap. And you still have to write, like in HTML code, basically. Okay, so here we go. And this sets me off down a rabbit hole. Where do the numbers come from? And that's when you realize that even the graphics provided by Wikipedia, no one fact checks. And they have the wrong numbers. Like some of these. Oh, I don't have those. I think it's the same one as the other one. Where is this going to take me? Now you start looking at the sheets and you get to a very interesting thing. Here's the release of the budget. And net interest on public debt is listed at $534 billion. But now I'm looking at the chart that was released. Wait, how come it's $480 billion? This is really 475. And this sets you off on a ridiculous rabbit hole. These are the release of the numbers. And the numbers say that the US government paid $534 net interest on debt. But yet, when you look at the official report from the Treasury, nope, that's the 2020 report. When you look at the official report from the Treasury, they have one of these charts. And the Treasury said they paid $475 billion net interest on that. That's a difference of $75 billion. And this creates a big problem because I can't verify the numbers. This sets me off on a rabbit hole of finding every single part of what did the government spend their money on. And this is what the government spent their money on in 2022, and they show you the 2021 number as well. Every department, here is the Treasury. Now, the Treasury doesn't provide you how much money they spent on interest on debt, at least not the net version. They tell you interest on public debt, and now it's telling you that they spent $717 billion on interest on public debt. So now I am looking at three numbers: 717 billion, 534 billion from the Congressional Budget Office, and 475 billion from the Treasury Department itself. But these are the raw numbers. So how do you rectify this? Okay, because interest on debt is not a spending department. It's part of the Treasury Department, which spends its money on government offices. That's how much money it spent on government offices. It spends money on the Internal Revenue Service, which how much money did it spend? Now, the income from Internal Revenue Service is on the other ledger. It's on the income side of the government. And then the Treasury also spends their money on other stuff, basically. Interest paid on credit financing accounts. There's other stuff, okay? And then there is this section, offsetting receipts. So somehow the Treasury made $64 billion. They made $64 billion, but I don't know how. This is not, so this is a detailed report, and they're saying the Treasury made $64 billion. It doesn't tell me how they did it. The other part of government spending, so you can go through every program, right? You can see education. So I did this in Excel. This is my day yesterday. I did all this yesterday. So here are government income for the last 3 years, how much they made in individual taxes, Social Security insurance, that's your payroll taxes, your corporate taxes, which are small, and other taxes. And then, like I said, you go to Wikipedia, you go to US budget, Jesus Christ, US budget 2022, you go to Wikipedia. Wikipedia gives you this chart, which is wrong because the idiots that made this chart and fact-checked it with Wikipedia have to sneeze, have wrong numbers in it. Like, this is insane. Like, how does this, like Tone Vays should not be fact-checking Wikipedia. I'm sorry. I have better things to do with my time. Like, they literally stuck the wrong numbers in here. How does this make it up here? Anyway, so this is why you don't trust, you verify. You don't watch Powell's speech. I don't know. I'll go to in 5 minutes. Let's see what the market's doing. Oh, there it goes. There goes Bitcoin. Well, whatever Powell's saying, people don't like it. He's saying the economy is weak. No, he's not saying that. He's saying that the pressure from I know what he's saying. He's saying that the pressure from inflation is still high, and they're gonna raise interest rates, and the market is panicking. So, 1 minute chart. Powell starts speaking at 10 a.m. Market goes down. It'll probably reverse. MRI buy, 1 minute chart. Here we go. Here we go. Boom, you go based on MRI trading. This is where you kind of go long. Go long here. You set a stop loss below the low. There. Once you're in profit, you set a break-even stop loss. I mean, I wouldn't actually make this trade, guys. I don't like to trade MRI on a 1 minute chart. I like to trade MRI on a daily chart, not 1 minute chart. But if I was catching a falling knife, that's how I would do it. And I would have lost. I would have lost about $500 trying to catch a falling knife. Now I would be bearish, but I would never short after such a big drop. Yeah, that's a 30-point drop. That's too heavy for my taste. All right, I want to get back to this. I spent 9 hours of my life yesterday doing this, and I haven't eaten since like Sunday afternoon. Ironically, I'm not hungry at all right now. This is what happens once you make it past 36 hours of not eating, and you don't, and you normally eat like once a day or twice a day within a short window. After 36 hours, you're no longer hungry at all. Like now that I've made it past yesterday, I'm good for like 3 to 4 days without food, no problem. I want to get back to this. So I took all the numbers of every department, and these are the 2 departments that interest me, because every other department, right? You can see how much money the government spend on every single department. What's really interesting is the Department of Education. In 2020, they spent over $600 billion. I'm not sure how that happened, but I'm not digging into that. Like, I don't care. This is the normal spending of the Department of Education. Around between 200 and 250 billion. But in 2020, they spent 3 times as much. And here's your Department of Defense. Spends around 700 billion. Now, the one that's interesting is, of course, the Treasury. Treasury is the one that pays out the interest. Social Security Department is usually the one that pays out the most money. That's down here. So I kind of highlighted the most important ones. That's Health and Human Services. That's your Medicare, Medicaid. And Social Security Administration pays out a huge amount as well. And then you have this, undistributed offsetting receipts. So this is how the government really makes money. That and the Treasury. Like the Treasury also makes money, but the Treasury spends more money than it makes. Like every single department makes some money. Well, not the government, not the legislative branches, right? Like these things don't make money, they only spend. Like the legislative branch, the judicial branch, they don't make any money. But almost every department, commerce doesn't make any money. Defense, even defense occasionally makes some money. Somehow, I don't know. Sell weapons. Though those things go somewhere else. A different department sells that. Like, but almost every department makes a little tiny amount of money. Health and Human Services somehow makes $200 billion, but they spend way more. But this is included. Like, we're not going to do double accounting here. The money that Health and Human Services makes is deducted from the money that it spends. So this is a cumulative number. So now we get to, so I didn't know any of this. This is all from yesterday. I'm a pretty good researcher. This, the undistributed off-budget receipts. So this is how the government makes money. And this is not tied to any department. This is how the government basically makes money. And in 2022, it made a lot of money. It made $418 billion. And this is not allocated to any specific government branch or government department. And the one here that sort of matters for now is this one. The government made $183 billion from trust fund. Whoa, my light just took a nosedive. Okay, that was weird. The government has a trust fund. I did not know that. It made a lot of money from that trust fund right here. $183 billion. And most of this is made from interest. So as interest rises, the trust fund makes more money, assuming it is in only government debt and not in equities. Therefore, I was able to match one of these numbers. This number here, the net interest on public debt, the 534, is actually determined by taking this Treasury number, breaking down the Treasury number in full. Let me make this smaller. Identifying how much money the Treasury spent on interest in gross. And if you deduct from it the interest received from trust funds, so 717 minus 183 gets you the $534 billion number that the Congressional Budget Office says is the net interest. But yet the Treasury still claims that the number is 475 billion. I'm rounding. So how do you get from 533 to 475? Well, now either they're deducting additional income from somewhere within undistributed offshore receipts, or they're deducting some of the income from within the Treasury Department of the 64,000 that they made. But I don't know how they're making the 64,000. So I don't know what part of the 64,000 is being deducted. Now we have to go further. Like I said, I wasn't going to let this go. So here we go. Congressional Budget Office. Now we start looking through their website and the Treasury website to get more numbers. This is their fiscal outlook for the future. Same Congressional Budget Office, by the way. This is the office that releases the numbers. And they released the numbers for 2022, saying that net interest on public debt, 534 billion. Same exact department, Congressional Budget Office. This is their projection for the future. In order to make a projection for the future, they have to tell you the actual amount from 2022. And now, for some reason, net interest is to 475. So in one document, the same exact department is telling you it's $75 billion more than the other. That's frustrating. We're moving on. These are numbers from 2021. Eventually, I get my hands on this statement, which is freaking amazing. This is the same Congressional Budget Office explaining how net interest on debt is being calculated. Now, I hope I don't bore you guys, and I know a lot of people probably switched off to look at Powell, but you have to understand that like I said in the beginning, the thing that's going to destroy the United States is this. It's this. Okay, financially. Like the US will probably have, a social civil war because the left can't get along with the right. And I understand why. But from a financial perspective, this is what's going to destroy the United States financial system. And I wanted to find out how to calculate these numbers. So you get to this amazing document, Federal Net Interest Cost, a primer. And this is where they try to explain how that number is calculated. But because this article was written in 2020, they're using 2020 as the example. So now, in order for me to find out how it's calculated, I need to also get all of these numbers for 2020 and try to back out the number for 2020. And here is the gross interest on Treasury securities. That's the 523. Okay, I have that in my spreadsheet right here. In the Treasury Department from 2020. It's got to be here somewhere. Interest on debt, 523, right there. They're rounding, 522.6. So it's 523. We got that number. They're subtracting interest received by trust funds. See, this is the document where I found out that you're deducting the trust funds. Otherwise, you have no idea. 135. That's how I know you're deducting the trust funds. This is where this document takes a turn for ridiculousness. Then they're subtracting other interest. Great, that's helpful. And they're subtracting investment income. But you see these things right here, B and C? Let's do the C first. That is simple. Only $2 billion investment income. C, earnings on private investment by the National Railroad Retirement Investment Trust. Great. At least I know where investment income is coming from, but where the hell do I validate this number? Good luck finding the National Railroad Retirement Investment Trust and their numbers. I actually did. We'll get to that later. But because it's only $2 billion, not exactly important. Yo, Prophet, thanks again, man. Beautiful. Thank you so much. Bless you for your amazing donation. Now let's look at B. B is where shit really gets convoluted here. Other interest. Great. What is that? Primary interest from financing accounts on federal credit programs. Okay, let's move on. Other components of net interest, and this is where they give you details on what other interest is. You can see that other interest is $41 billion in 2020. Other interest. Here's 2020. Interest received from credit financing accounts. Credit financing accounts lost $32 billion. I don't know what those are. Unemployment loans, well, it's a factor, but it happens to be zero. Interest outlays, tax refunds. So this is what it cost them. That's not the minus number, is the one where they make money. The positive number is where they spend money. And then there is intergovernmental interest from all these things, like the USPS Retirement Healthcare Fund, right? And then they break these down. But where the hell do you get these numbers? I am assuming that these numbers are hidden somewhere in Treasury's earnings here. The $67 billion that the Treasury made money on, I'm assuming that all of that other interest is somewhere in here, though it is possible that it isn't here. Now, we do have some information on employee share, employee retirement. It's in the documents. I just didn't break it down because I don't think it matters. I don't think that there's a military retirement health that makes money and the civil services retirement that makes money. And then there is an other that makes money. All these others are very, very interesting because they can be broken down. So we go down the rabbit hole further. And this is where it really gets out of control. Hopefully you guys are still watching. Now you get to the monthly Treasury statements, but the good news is that when the monthly Treasury statement is the September 30th statement, don't even get me started why 2020, the year 2022 starts on October 1st and ends on September 30th. That is, again, I think the reason they do that is so that the president that's about to get booted out and a new president comes in is still responsible for that year's budget. But anyway, when we say the year 2022, the year actually ends on September 30th. It doesn't end on December 31st. So 2022, the year 2023 actually started on October 1st. Bet you a lot of people didn't know that. Now you do. I actually didn't even know that, but now I do. So this is the filing for 2022 from the Treasury Department. So this is the document that may actually help me. So I'll give away the punchline first, because this document goes into unreasonable detail, table 5, of what the government is spending their money on. And when you get to, so this breaks down. So if you get to the Treasury, so we go to railroad, you actually find railroad here. And rail pension, so anyway, so I have a feeling that when I break this down, and this is the expenses, it's the same expenses as that one. It's the same expenses as this, only here in the case of the Treasury, for example, instead of having, let's say, 15 lines, it has 50 lines. So this is the part that I'm going to be spending 8 hours on today, trying to find out if all those numbers are here and which numbers are they also deducting from there. But in order for me to find this report, this is the 2020 version, because I have to use the 2020 version to match out all of these numbers. All of these, I have to use the 2020 reports to find each of these lines. Hopefully somewhere in this detailed Treasury budget. But you still have other tabs. But in order for you to find that report, I have to go through so many other reports. Here's a 258 report. Here is a 996-page report, which I have not gotten to yet. And here is another a government report on all of this stuff. That's 200 pages. Now, this is the best one, because check this out. I think this is the best one. Which one was it? No, I'm sorry, not that one. This one. I have too many tabs. I think it's on page 196. 196. Well, page 196. Oh, why don't I just type 196 in here? Ah, crap. You know, every time you need to, because when I was on a different monitor and I was scrolling, like shit was scrolling, so I can easily find the chart. Maybe it was 176, not 196. I think it was 176, my bad. Damn it. Oh boy. Okay. Net interest. Boom, here it is. Got it. This is insane. One. Where's that chart? That's the chart, but it was zoomed in. Maybe it is in this report. Nope. Anyway, I couldn't find the big version of it, but it is here. It's in this report somewhere. Look at this. It's the government projection of how much money the government's going to spend on interest. Now, this chart goes out for 70 years, but this chart is grossly under because I can see the numbers. I'm looking at the numbers. Okay. So what this chart is actually going to look like at 5% interest, it's actually going to look like this. That's what the chart's going to look like. Okay. And I didn't even draw it right. Like this. That's what this chart will actually look like. Well, it's not going to go to the left, but you get the point. The chart's actually going to look like this. Okay. So this is why debt held by the public, and oh man, where the hell is the full chart? Oh, that line stays. Let me get rid of that. See, before I was like scrolling and the thing was moving, but now it's not doing that. It's not scrolling in real time. But that chart's here somewhere. It's in this document. And the government knows this. At least one economist at the government knows this. So this has been my rabbit hole yesterday, and I'm still not close to identifying where that 475 number is coming from. Though I can really use the other number, but it's got to be here. It's got to be in this report, because this is the full expenses report of the federal government from the Treasury, and the Treasury is responsible for this number, net interest. And I need to know what else they're deducting. Now, it does make a little bit of sense, because if the government is going to spend $18 trillion on interest payments, but they're earning, let's say, 15 trillion on interest payments, you want to net those out. So it makes sense why they're doing that. Now, the only way to stop this from happening, man, how do I need that page. Where the hell? Why does this always happen on like live air? Need that page. Oh, wait, I know how to get the page. I know how to get the page. Pages, yeah, it's page 176. Okay. Yeah, so I was right. So it's not this document. It's definitely not this one. But I just got that one this morning. 176. And it's not this one. Oh man. That is not good. That is not good. I'm sure the moment I end this stream, I'll find it. I'm pretty sure it's not here. Yeah. Oh, wait. Oh, it's 176 up here. Right, I got it. That wasn't page 176. Sponsor page 176 of the document. Here we go. Got it. Here it is. There it is. There's the chart. This is the explanation. This is the report you guys want to look for. How do you find it? You go to fiscal.treasury.gov and you find this financial report. There's also, this is the monthly report. So I don't care about the daily. That's insane. But this is the report you want. This report. And you want, by the way, getting these reports, I had to have a hack. Like I was able to find this one, the latest one for end of year September. And then what you got to do is you got to change the date. See, if you change the date here to 22, bam, you get the report for 22. And the only way to get the report for prior years, and you got to do September if you want the fiscal year, you got to just change this to 20. So these are the kinds of, like hacks I had to do in order to try and get this data. But yeah, you want this report here. This bad boy. I don't know how long it's going to be around, but I can't believe that they did this. Like they're telling you what's going to happen here. It's completely nuts. And everything here is the reason why this is going to be a hockey stick is because of this. And then I started to read this to try and figure out what interest rate they're using. So here, interest spending was 1.9% in 2012. And under current policy is projected to reach 5.1% in 2034. So they're only projecting that the average interest that they're paying is going to be 5% in 2034. And I disagree with that projection. So I think this is grossly underappreciating the exponential nature of the rising interest rate with cumulative deficits that have interest being paid on all this cumulative debt over and over and over and over. And this is probably a main reason why the US government is so hell-bent on going to a war with Russia and China, because they need a catastrophe unlike anything we've seen in the United States since World War II in order to make this go away. Like it can either be an unreasonably big natural disaster. It's one of three things, right? Either a major national disaster, a breakup of the United States, because if one side breaks off, or let's say the United States breaks up into, say, 5 countries, who's going to owe this federal debt? It won't exist. Okay? They'll be independent countries and they're going to start fresh. But the United States government does not want to go to that route. That's their least favorite option. To stop this from happening, the least favorite option is for a breakup of the United States. Though I think that's the most likely, but that's the least favorite. The most favorite option is war for the government. The other option is an unreasonably large natural disaster, like Yellowstone volcano blowing up, or a tsunami that destroys the East Coast. Like New York's gone, Miami's gone, like a natural disaster. That gets us out of this, right? Because then they can just say, well, we have to default on the debt, we have to start a new monetary system. Look, there's nothing we can do. Our country is destroyed. A giant earthquake that completely destroys California, and they can say, well, we have no food production. Like they need something on a massive scale to tell to the world yes, the greatest country in the world has defaulted and they can't pay its bills, but there was a good reason. But I can't think of any other reason besides those. Like a natural disaster, the likes of which we haven't seen in over 100 years. A war equivalent to World War II, or the complete breakup of the United States. It's the only three ways to get out of this. Now, you can delay it. You can delay the inevitable by dropping the interest rate back to zero. If you drop the interest rate back to zero, then this line, which, like I said, is grossly, you see how it goes up linearly? That's incorrect. It's gonna go up exponentially. I don't know why. See, right here, it's going up exponentially, and suddenly it's going up linearly. That's a mistake. That's a huge mistake. It's gonna go up exponentially. It can go up exponentially, and then it can be flat if the interest rate drops to zero. But then it goes up exponentially again when the interest rate goes back up. But they don't know when the government is going to go back to 0% interest rate on federal debt. So they can't just say, hey, there's going to be a 0% interest rate between 2050 and 2060. So the only assumption is that the interest rate is not going to go back to zero and is going to go up exponentially. And the only way to stop it is to drop the interest rate back to zero. It's the only way. But Jerome Powell wants to fight inflation, so they can't drop interest rates back to zero. The only way to understand why America is going to collapse financially is to really understand this chart. And it's buried in a 250-page report, which I was going through yesterday. All right, on that note, I'm done. Let's look at the charts. Well, the market rebounded. I just picked a bad area to catch a knife, which is okay. So the next area I would have tried to catch a knife would have been one of two places. It would have been the break of the prior swing high over here with a green star candle there. Oh. Or another area I would have tried to catch the rebound would have been the break of the next swing high, which is this candle here, the red one or the green one, and once again, a green star candle. So because this purchase did not work out, I would not have tried to catch here, and I didn't really have an MRI buy. I had a warning. Even though I don't really pay attention to it on a 1-minute chart, I would have tried to buy the breakout of prior swing high here or there. And if we pull back again, and then we're going to break this prior swing high, I would have done it there. You can see Bitcoin rebounded as well, and it is completely correlated with the stock market. If we line it up minute by minute, this is the 10 a.m. minute, and the market, flips down. I'm not going to take credit for the 10 a.m. reversal because Powell started speaking. You can see an identical structure. You can see the stock market went up first here at 1022. And where is Bitcoin's 1022? Here. Okay, so they're just not the same size. Let's get them to be the same size. Okay, that's close enough. So you can see right here, that's the 1023 candle, and that's the 1023 candle. So they both corresponded to a top. So one is not leading the other. Here is the 1037 candle that marked the top in Bitcoin, and here is the 1037 candle that marked the top in the S&P 500. They are 100% correlated, and there's nothing you can do about that. Now, you can say that Bitcoin broke out above its prior swing high on 1017 minute. And here is the 1017 minute in the stock market. And it did not break above the prior swing high. It did for like a tick, but it pulled back. But Bitcoin stayed strong. So right here on the 1019 minute, Bitcoin is still strong and rising, making new swing highs in the last 10 minutes, and the S&P is lagging near swing lows. So from this candle alone, we may be able to say that Bitcoin is a little bit of a leader, and you can buy into the S&P 500, but there's nothing stopping Bitcoin from completely reversing the next minute, and suddenly that was a bad trade. But they are absolutely correlated. All right, guys, that's enough for me. I need to get back to digging into this financial statement from 2020 and trying to, it's a big statement. I mean, it's 40 pages, but it's all 40 pages that look like this. Like it's 30 pages of this. And I got to find out which line items in here correspond to these things, and hopefully they have similar names, because otherwise I don't know if I can dig further. There is a way to dig further, but now it's all symbols and department codes, and that I'm not willing to do. So the next best solution for me, if I can't reconcile these numbers, if I can't reconcile this $41 billion, then what I'm going to do is I'm not going to use this other interest in my historical calculation of net interest. And I also have no idea what this number represents. Not that one, this one. Sorry, this one. I don't know what this number is. This is, because you can see the numbers right there. So this is federal government current interest payments. So they paid in Q4, in Q4 they paid 852, but that's Q4 of 20. So I think what this means, but again, also I don't know what this number means. I just don't get it, because in the fiscal year 2022. In fiscal year 2022, which ended September 30th, they paid 717. So maybe that's the amount of payment that they made in Q3. That's the Q3 cumulative interest payments. Q3 cumulative. Q3 ends at the end of September. So this should have been 717 for the year, right? Well, I guess that's how much. That's the thing. Like, I'm not sure where this number is coming from. I gotta figure that out. But you can again get all the data going back to 1947, where we started at 5 and have now made it all the way to 850. And this is gonna probably look at the speed. Look at the speed of this. And with a rising interest rate, this will only speed up. Like, it's going to be crazy. It's about to get crazy. So fast, the next president will have no idea what hit him. Biden still has another 2 years of this. Well, 1 year, sorry. 2023 just started. Right, 2 years, 2023, 2020. The 2024 election is in November. So there's still 2 more years of Biden. So the next president that comes in is literally going to go, holy shit. This number is going to be over $1 trillion. Easy. Probably 1.2 trillion. Okay. Completely insane. Welcome to exponential functions. And like I said, the only way to stop it is to drop the interest rate back to 0, which the Fed is not going to do. Unless there's a natural disaster or a made-up disaster like the one we had in 2020. Or a war, a real war, where the US has to support the war effort and they have to drop the interest rate again back to 0 to support the war effort. Or half the country breaks off and they say, screw this, we're going to use Bitcoin. There's not going to be any debts. And the North, which doesn't want us to leave, they're responsible for the US debt, US federal debt, right? But that's another reason why the federal government is not going to let half a country break off, because the country that breaks off is going to want to abstain from being responsible for the debt. They're not going to want to pay this. So if a state breaks off and claims to be independent, they're going to abstain from being responsible for the US federal debt. And that's one of the reasons why the federal government will not let a state go independent. No different than Ukraine, right? Ukraine did not want Donbass to go independent, since Donbass is where most of the manufacturing is. They're like, wait, you can't go independent. You have to help us pay our debts that we borrowed money from the IMF and all this other stuff. Like, these are important situations. Trump can't solve this problem. If Trump comes back for 4 years, Trump just has to pray that this does not implode the federal government during his 4-year term. And Trump did one of the worst things for this to go hockey stick by shutting down the economy during COVID and creating this ridiculous 2020 deficit. Again, my own spreadsheet. Don't trust verify, guys. Don't trust verify. The US deficit, oh, I don't have the deficit number. The US just had no revenue, right? So the US deficit, see, in 2020, the US government only made 3.4 trillion from taxes, but they spent 6.5. So that gap's huge. 2021 also had a big gap, but not as big. So it's extra $500 less, so $500 less in revenue and about the same spending. So it's $500 billion extra on that debt. I don't have a solution to this problem. Like, the best solution to the problem, I have some solutions to the problem. The best solution to the problem is, one, get rid of, set term limits on every single part of government. Set term limits on that. Maybe not the judicial branch, that's fine. But set term limits on Congress, and don't let Congress borrow money. Create a provision that kind of allows them to print some money if they need it, but not borrow. The thing is, the reason why this is about to implode is because of cumulative interest. So if the government was able to print money and not borrow money with interest, this wouldn't be happening. This would only go up linearly, not exponentially. It's going up exponentially because of interest. It only goes up linearly in a world with no interest. Also, if there is surplus, it needs to be used to pay off the debt, the principal. Well, China used to own a lot of debt, but they've been selling it. They've been getting rid of it. China has stopped buying U.S. debt. The reason is because China is anticipating a war with the U.S. So they stopped buying U.S. debt. Okay, I'm going to open a card, and then we're going to call it a day. Man, you should have seen I was, if I had hair yesterday, I would have pulled it all out, trying to get to the bottom of this shit. All I wanted to do was verify the interest payment. That's all I wanted to do. I thought it would take me 20 minutes. I'm like, oh, it's easy. I'm just going to pull up the federal budget, and I'm going to see exactly where that 475 number is. And holy shit, did this take me 9 hours. And at best, I'm either halfway there or I'm going to give up. All right, pack time. All right, I feel good about this one. I need a Tone Vays card or a Cypherpunks card. Like a Cypherpunks card is just as good because I have 2 Hal Finneys, and I can trade Hal Finney for a Tone Vays. I actually already have someone that's willing to trade a Tone Vays for a Hal Finney. But I don't want to do it yet because I may pull a Tone Vays card. And I still need a Cypherpunks card to complete my set. So I haven't seen the card yet. Let's look at them together. Economics card, one of my favorite cards. Looks super cool. Oh, wow. I haven't put this from yesterday into a case yet. So I'm going to do that. Next, we have the education card. Another one of my favorite cards. This is the Federal Reserve card. I just think it looks super cool. I actually don't think the Federal Reserve controls the White House or the Pentagon, but it looks cool. Bretton Woods, yep. More, no, so more. This is on the Fed creation, creature from Jekyll Island. Wow, I get this card in every pack. I may have all of them. The government card, more like the mainstream media propaganda card. Richard Nixon, gold standard. Is this the last card? No, there's one more after this. I have no idea what it is. It's a resources card. This is bitcointimes.com, and the last card is, damn it. We all love the Zimbabwe $1 trillion bill, but we are still on the hunt for a 1 of 100 Tone Vays or Cypherpunk. All right, guys, we'll try again tomorrow. Thank you all for watching, and see you all on the next one.